All right, everybody. Well, thanks so much, Realty One Group Turnkey, for having me and your team meeting today. It's a pleasure to be here. I told Robin to let me know if I start getting choppy at all. I'm in our back guest room showing off a fake plant that I put in there just to have something in the background so you weren't just seeing a white wall. And just to tell you a little bit about myself, I'm a loan officer at Fairway Independent Mortgage. I got into the loan industry actually starting out at a financial institution that's local to the Tacoma Pierce County area. And I jumped in with no experience whatsoever. I started there actually as a teller and then jumped into a loan officer role with no experience. And I was the only one. So I didn't have anyone to go to ask questions to. And I kind of just lived out of an underwriting manual for pretty much a full year after I started doing that, and learned a lot. No processor or assistant. And anyway, it was quite the year. That first year I had helped about 53 families. And, you know, I got some other cool opportunities. I was able to become a certified financial counselor. I was on a project team to develop a financial counseling program, which we did do. I would go out and kind of pitch that to other mortgage branches in the area to get referrals, to do credit counseling, to make buyers more pre-approval ready. And got a lot of experience there, but came over to Fairway within the last year, have loved it since. And I just appreciate everyone's time having me on today. And what I wanted to share with you guys was a very cool, some very cool data and a report that was actually put together by Zillow utilizing the U.S. Census Bureau American Community Survey in 2017. So last year in 2019, Zillow put together this very cool analysis using data from this survey that allows those of us that are in the real estate industry to better understand the people that we're helping. And some of us help different people. You guys on your end of the table get to help a fair amount of sellers. I, of course, primarily work with buyers. But this report dives into it all. So just to get started, let's go ahead and talk about selling a home in America. So what you're going to see on your screen here is just what we call the typical seller. Typical seller is about 48 years old. You can see some other statistics about them. Median age of a first-time seller is 39 years old. So that's typically someone that's been in their home, as you guys are. Am I glitching out?
Yeah, could you repeat all that?
I can. So on this last screen here, and let me know if it does it again, I will move. We're just seeing some average information about the typical seller, median age 39 years old. And it's this next slide that I'm really excited to show all you guys. I think it's really interesting. So here's some common responses for people that use or don't use an agent when they're selling their home. So you can see that some of the top reasons why somebody does use an agent when selling their home is to sell their home more quickly. They say that it's easier than selling on their own, which I know that's true. And they don't have the time or energy to sell on their own. I feel like in a day where we're all getting so busy, that's especially true. And among sellers who don't use an agent, here's their top 3 responses. They don't because they want to save money. That's the biggest one. I feel like a lot of it always comes down to the money, right? They were confident they could sell on their own, or they already knew a potential buyer. So not everyone knows exactly helping people sell their home and buy as well. And you know, sometimes it just takes the right marketing and just making sphere on social media and your network that you're communicating messages regularly as to what benefits do you bring to the table. It's really by doing that when those people do come to sell their home, they're going to remember those benefits and know that, okay, maybe it's worth the rather small cost just to relieve some of the headache by having a professional they can rely on.
Josh, we might need you to move to your living room.
Here's some of the top selling stressors. Hang on a second, you guys.
Brief interlude, everyone.
All right, I'm taking you guys on a field trip. Thanks for hanging in here with me, everybody. Okay.
We're all working
Can you see
from
me
home.
okay?
We feel it. It's cool.
Can you see me okay?
And we can hear
Okay.
you clearly.
Awesome. All right. So as I was saying, some of the top selling stressors for people that sell a home, you're going to see a whole variety of reasons. And you can see over on the right-hand side that first-time sellers are more likely to say that most aspects of selling were stressful to them or their families. So again, this is where, you guys as real estate agents really have, the privilege and just the wonderful opportunity to make that selling experience as easy of one as you possibly can. And it seems like to me that most people that I know that have sold a home or are currently selling their home, they just love having an agent that they can just reach out to, that's available to them, and that just makes them feel like they're not alone in the process and that they're not missing out on some major step that they should know. And I know that you guys at Realty One Group Turnkey really prioritize that and do provide that excellent service to the people that you help. Here's the top reasons why sellers move: life events, market dynamics, and onto the next screen here, their top seller regrets. So many sellers out there wish they would have started the process of preparing to sell sooner. I'm sure that some of you listening to this may have a couple of fun stories about maybe somebody that reached out to you and said, hey, I'm interested in selling my home. And maybe you went and you took a look at the place and asked them what they had done to prepare for it. And maybe they had done little to nothing. I'm sure that there's some fun stories out there. So let's jump into buyers that maybe are repeat buyers or that may be first-time buyers. All of us have heard all the stories about how right now the largest share of people that are buying homes for the first time are in the millennial age group. And they primarily, most often, or most of them rather, use social media and internet to be able to connect with real estate agents and find real estate professionals. So some of this data kind of can help, I'm hoping, shine some light for you guys on maybe just some different personality traits and techniques that you can keep in mind when you're reaching out to market to buyers. Shot of the typical buyer. Again, over on the right-hand side of the screen, you're going to see the median age of first-time buyers, about 34 years old. This slide, I think, is really, really interesting. This talks about what's most important to people when they're buying a home. So you can see it's for the home itself. The most important factors is that it's within their initial budget. And this is where I will just chime in as a loan officer, that it's so important that they do connect with the loan officer and just understand the financing process and get an idea of not only what they can afford, but get an idea of what kind of a payment they can expect. There's a lot of people that want to go out there and want to buy that $450,000 house, but they only want a monthly payment of let's say $1,100. That's going to be pretty difficult to do. So that's where a conversation with the loan officer is going to be so important, just to make sure that they fully kind of know what is in their budget to begin with.
Also, Josh, on that point,
yeah.
The market right now is so hot. If you know exactly what your financing options are, you have a better opportunity to write a strong offer for that buyer and help them win that listing, just because there's probably multiple offers that you're going up against. Knowing exactly what you can offer is going to put a strong offer on the table.
Totally. Yep, you're exactly right. It's really a confidence tool. Somebody that can go out and they can shop confidently and know that they are fully pre-approved. And that's something that's really important to us. Is for those of you that don't know, there is a big difference between somebody being pre-qualified and pre-approved. Everyone that I help at Fairway we get fully pre-approved. So we make sure that we do our due diligence and actually getting that important documentation like pay stubs and W-2s and bank statements and all the rest of it. Because, you know, not only is that just good business, a good business practice for us to do as lenders, but it also is making sure that we're setting them up for success and ultimately handing off somebody that is, you know, ready to buy off into the hands of you guys to then take them on that next step of actually finding their home. So some other important characteristics for the neighborhood: they want it to be a safe neighborhood. A lot of people like to be able for it to be walkable. 53% said they want it to be close to shopping services and leisure activities. I don't know if any of you guys have heard some of the interesting trends lately about the number of people buying in more rural areas has actually been increasing lately. And that seems to be a result of everything that's been going on with COVID-19, people wanting to have property out in a space that's a little bit more further away from mass amounts of people. I thought that that was really interesting when I heard that. So as far as a buyer's budget, I think this screen is interesting as well. About 55% actually do stay on budget. And that was actually pretty surprising to me, that it was even at a 50-50 split. It seems like in most cases, the people that I end up working with, they kind of realize that in order to really get that kind of home that they're looking for, maybe with that extra bathroom or in that neighborhood that they absolutely love, that they go a little bit beyond it. Now, granted, they won't go too far, but regardless, just the statistic of 55% staying on their initial budget, that was pretty surprising to me. You can see that 20% spent less than their initial budget, and a little bit more on the flip side, 26% did go past that initial budget. Even breaks down which generations and demographics go over budget more than the other. Thought it was also interesting that millennials typically will go a little bit further beyond budget than, say, boomers would. And then lastly, 61% of buyers wish they'd done something different, like similar to selling a home. Starting the process earlier, they wish that they maybe would have chosen a different home, but that's only 13%. And again, I think that when they're really working with the right realtor, like an agent at Realty One Group Turnkey, I mean, I know that you guys help people get into a home that truly is the best fit for them. So if we jump into renting, there's actually something cool that I wanted to show you guys that we call a rent versus own analysis, and I'm going to show after we get through a couple of slides here. And it's something that we present to people that maybe aren't quite there as far as being ready to pull the trigger and jump into buying a home. So here's some information on the typical renter. Here's some reasons why renters ultimately end up moving: life events, of course, having a family. It's not always easy to stay in a small apartment. Some of the pros and cons of why people do rent and what some of the hurdles of renting are. I thought it was interesting that 33% of people said renting suits their lifestyle. I'm sure that some of those responses could be from people that maybe move frequently for work, and it's just can be easier sometimes just to jump into a month-to-month apartment versus buying and then going through the selling process. So I can understand it from that perspective, but that number was still higher than I thought. Some of the hurdles of renting, it can be finding a home in their desired price range, saving for upfront costs. Washington State, if you're not aware, does have a wonderful down payment assistance program. It's called the Home Advantage Program. It does fund the entire minimum down payment. In some cases, there's even some extra left over that can go towards some of the cost as well. So that's when you can really make an awesome combination between that, a potential seller credit, gift funds from a family member. It is possible nowadays for people to get into a home with pretty much zero money out of their own pocket. So 58% of home buyers with debt say that they are worried that they wouldn't qualify for a loan. So, you know, it's not, I get to talk with a lot of people that are first-time home buyers, and oftentimes one of the biggest concerns that they have and their fears and why they haven't tried to start the process in the first place or for so long was that they were just worried about getting denied. You know, it's kind of an intimate, you know, revealing process to go through when you submit a mortgage application, because you are having somebody that you don't know, you know, looking at all your personal information, looking at your bank statements, or looking at your entire credit history. It can feel a little bit vulnerable. And that is a valid fear. I understand that, that's uncomfortable to go through. Again, you know, working with the right mortgage lender, this will eliminate that fear, especially somebody, you know, who does have maybe a background in financial counseling. So I mentioned way back when I was just introducing myself at the start of my presentation here that I, at my last employer, did actually take a proctored course and became a certified financial counselor. And I got used to having those kind of conversations with people about their credit. How do we build it? We have some collections here, that's okay. How can we come up with a payment plan to pay those off? Or can we look at taking out a signature loan or doing a cash out refinance on that auto, on that vehicle that you own free and clear to pay off and consolidate that debt? I mean, there's a lot of creative options that can be thought through and that can be done. Just kind of takes the right person and the right loan officer to examine someone's credit report and actually want to provide a solution. And that's what's really important to me and important to us at Fairway. So I'm really quick going to jump back out. I'm hoping you guys can still see my screen here that I'm sharing.
We can.
Awesome. So this is something that, as I was mentioning, we call a rent versus own analysis. And this is something that we'll send off to people that are on that cusp and that tipping point of, well, I mean, is it really that much better to own than it is to rent? What are some of the advantages? Doesn't it cost a whole lot more? So this is something, just so you know, what I'm about to show you on your screen. If you're working with somebody right now that is currently renting and you just feel like they could either use that little extra incentive with some education and information to want to jump into buying a home, or you just have a first-time buyer that you're helping and you think it'd be kind of cool for them to see this information, reach out to me, let me know, and I'll prepare a custom analysis for that person. So this is what I use. Again, rent versus own analysis. So what they come across first is we take what they currently pay in rent. In this example, I said they pay $1,500 in rent. And then you can see, just for the purpose of my presentation to you guys today, I highlighted a few different scenarios: a conventional purchase at $330,000, a VA purchase at $375,000, and
Oh gosh, so we're still on your the PowerPoint.
Oh, you are? Oh gosh.
No worries.
Thank you for letting me know. Okay, how's that?
Much better, thank you.
Much better. All right. Forgive me, everybody. This is my first time playing around with the screen sharing. So this is what I was talking about that you can now see. So we have a summary table where I highlight how much somebody pays in rent. Again, as I mentioned, for this example, I did $1,500, and you can see those three other options that I was mentioning that I input. So if you look at the line that's called net monthly pay, stands for net monthly payment, you'll actually see that the mortgage net monthly payments are a little bit lower than the rent, but the total payment is a little bit higher. So why is that? So what we're looking at there is that when it comes down to just the actual principal and interest portion of your mortgage payment, that oftentimes that is lower than the average rent here in Western Washington in the Tacoma and Pierce County area. When you add in the taxes and insurance, sure, you can see that cost go maybe a little bit above what somebody could be paying in rent, depending on where they're renting. But that homeowner's insurance and property taxes, those are just extra costs that come with owning a home. And it, you know, what you're really buying into is that wealth generating tool. So you break it down to the net of just principal and interest. Again, it can oftentimes be less than what somebody's paying in rent. Down here, it again is highlighting those net monthly payments. I love this graph right here. This shows in a short-term view, so we're talking just 5 years, 60 months, what somebody would pay in rent if they pay $1,500 a month in 5 years versus what they would have paid down on their principal balance of their mortgage. Something that I love talking with people about when they're taking out a home loan and they're buying a home is I always like sharing with them, you know, hey, just remember, every month when you send off that check to your mortgage payment, I want you to remember that you're actually in a way that you're actually paying yourself, because a portion of that is going to principal, and the more principal you pay down, the more wealth you're building for yourself. And that's highlighted dramatically in this last chart here. Look at, in this example, somebody's net worth in 15 years if they rent versus buy. So you can see that in all these examples, if this person continued to rent for 15 years, they wouldn't have built any equity, right? Because you don't do that when you rent, that's basic. But if they would have purchased, they would have had almost $400,000 in net worth, which is incredible. And this is by far, in my opinion, the most impactful chart out of this analysis that we do send to people. This can really be the one that helps people feel more motivated to make that jump into being a home owner.
I think that's a big thing with first-time home buyers as well, is that they think you have to have a few thousand in the bank. They think that you have to have a big down payment saved up. They think you have to have perfect credit. Like, there's so many options that we can offer to our clients now that they just didn't even realize were resources.
Right. Totally. Yeah. I agree. Do you guys find that a lot, Robin, in the conversation that you guys have with first-time buyers, that they just don't know, you know, what they need or really what it takes to even qualify to buy a home?
They don't. And a lot of times too, especially as time's gone on, cost of living's gone up, etc., people don't realize how much that they're paying in rent could be going towards their own ownership, just because they haven't had that education. That's something we really strive for, is even if people don't buy a property through us, our goal is that we can help as many people feel confident in learning about how to buy a house, so that when they feel ready, they are able to, especially with interest rates being as low as they are right now. Like, if you can afford to rent, you can basically afford to buy.
Yeah, that's so true. Yeah. And I love that I just want to say really quick, I love that you touched on, even if now is not the right time, giving them the confidence to do it, because not everyone thinks about it this way, but buying a home is such an emotional process for so many people, right? So just working with somebody, you know, working with a lender, and an agent and a professional that works in that world every day, that's there to encourage them and make sure that they are being informed and fully understand the process, that can be a game changer, and what I feel like really kind of you know, takes us up to that next level of service to our customers.
Agreed. A lot of first-time home buyers also remember the way the market went in 2007, and they're concerned that, you know, there's a bubble, or that a lot of people are concerned about the cost of properties right now. They think that, you know, there's going to be a time where the cost of properties is lower, and, you know, that's very true. That might be coming, but interest rates are almost guaranteed to not be as low as they are right now. So people are cheating themselves out of God only knows how much money, because they think that they can save money by waiting. But the truth is, you're going to save money by buying now over time.
Yeah. You're right, Robin. And, you know, something that I share with people is it's just a short phrase, but oftentimes I'll say, you know, don't try to time the market. And what I mean by that is I'm not saying don't try to be strategic. Don't put, you know, no thought into, you know, buying or refinancing or whatever it is that they're coming to me for. But I do say don't assume that you know what's going to happen with the market or with interest rates, and try to time it out and wait till that perfect time, because it may not go where you think it's going to. And you potentially, if it made sense to do whatever action it was that you wanted to do at that time, could make sense just to jump on it now, and it could come back to bite you if you wait. And that's just a realistic expectation to have, just something to know. So here's what the typical owner looks like. Just jumping back into the slides here. I think that I have you guys back on my PowerPoint screen here. Median household income, $75,000 a year. Of course, we live in an area where we have a lot of you know, high-paying jobs up in Seattle. So that looks a little bit different in our area. Here's some interesting information on homeowners that have no plans to sell. The top reasons why is that they just love their home. They've made it their own. They don't want the hassle of moving. They have stability for their families. Maybe they already are involved in programs in their community and don't want to move to another one and kind of lose some of that relationships and outlets that they found within their own community. That is great for their family. For homeowners that do plan to sell in the next 3 years, their top reasons were that their home no longer fits their needs. How many of us have helped some buyers before that had kids that grew up and moved out, and they were left in a 6-bedroom house, and it's just 2 people now, and they're fine going down to a 2-bed, 1-bath. We've all seen those scenarios before.
Or kids that turn into teenagers and don't fit in their rooms anymore.
Okay, Sarah, was that a reason for you?
Yeah, we're getting there.
Love it. Yeah, so there you go. So you'll be a part of that statistic soon. And then just rounding out this presentation here, when it comes to Fairway, we are a nationwide mortgage company, but we pride ourselves in what we call hometown service. So if you come into our branch, I'm located at the branch on 19th Street near Cheney Stadium down here in Tacoma off Highway 16. If you come into the branch, you're going to see local decor. You're going to see us all drinking our local coffee with our local artwork up on the wall. And we love the areas that we serve, and we love Pierce and King County and Washington State, and strive to give the best service to everyone that lives here. Some of us are licensed in other states, but primarily Washington, and we truly love our community. I wanted to share this with you guys to wrap up. This is just Fairway at a glance. So we've been around for over 20 years. We're licensed in all states. We were ranked the #1 best company to work for 6 years in a row. We have over 7,300 team members now. In 2019, we closed just over $39 billion in volume. And just kind of a quick fun fact to share with you guys. I'm sure you guys have heard that this has been an insane year for refinances across the country. I'm not talking just Fairway now, but across the board, we're seeing about 3 to 4 times the average volume of refinances that would typically happen in a year, all trying to refinance at the exact same time. So mortgage loan officers, mortgage loan processors, underwriters are all very, very busy. And just so far here in 2020, as I mentioned, we closed just over $39 billion last year. So far, year to date, we're coming up just shy of $30 billion. So we do expect to pass what we did last year. It's a booming time. Interest rates are low, and that's causing a lot of people to buy and refinance. But that's my presentation, you guys. Thanks so much for, again, letting me come on. Hopefully this was informative and helpful to some of you guys out there.
Absolutely.
For sure. Thank you.
Thank you. Yeah.